Welcome to the Stage Analysis Members Weekend video. It's Sunday the 7th of August 2022 and I'm going to start with a little bit of an educational piece tonight as there's a lot of new interest in Stan Weinstein's method at the moment, so I thought it would be a good idea to have a look at the early stage 2 entry point, just give an idea from a historic example. So this is from the stage analysis course that I did a while ago, a couple of years ago. It's a 3.5-hour video course that goes into some detail about the various stages and the entry points, and a little bit more context and additions to what was in the book. So this was used in that. So I just wanted to go through this. I've added a little bit of extra markup than I had at the time. Included some of the Wyckoff markup in the base structure here, and also wanted to talk about obviously looking at if you get an example like this, it shows you what happens after the fact. So a lot of the times when you're getting an educational piece and they're showing you examples and what's happened after the fact, it's not very helpful at times. You basically, this is our stage 1 base down here, which doesn't begin to move into stage 1 until you're much later in the base structure, until you're a good 4 or 5 months into the actual base structure. This part in here is still in stage 4. So until you're actually into this later part of the base structure and it's starting to move above and below this 30-week moving average here and tightening up a bit, it's still under a large amount of resistance, and the base could potentially still be a redistribution base at that point, and it does actually make a continuation breakout lower before reversing back up and forming a spring. So this is what we call a terminal shakeout, which is a spring number 1 in the Wyckoff method. So one way of looking at this base structure, so this is we've gone through the stages here. You've got stage 4 decline as we start to transition into stage 1, and then we break out into early stage 2. So this is the Weinstein ideal entry point as such, and then we've got the backup area in here, and then secondary entry points as we start to come back out again. So in this Apple example here, the secondary entry point is much higher. In the book example, it's the secondary entry point is much further down at the actual breakout point, but every chart is different. You don't always get a pullback all the way to the breakout level, and especially with an exceptional volume increase like we saw in this one and a huge price spread move. So this actually jumped up by, let's grab this, it was up 26% in the week. So it was a huge breakout week for this one compared to obviously the range. It'd been quite a tight little range in there, but it'd gone through all of the Wyckoff type base structure. We had the selling climax into an automatic rally, some secondary testing in here, then it formed an up thrust by breaking above the top of this structure. So the selling climax and the automatic rally identify the initial starts of a structure. So that's where we would mark the initial range, and we had this up thrust into here, pulled it back into the range, and some more testing at the lows of the range, some shakeouts before tightening up. And you can see in this point in here, there was multiple levels where it tested a similar area in here. So there's multiple tests of this high above the 30-week moving average. So this then becomes our new, more significant level. So we'll take the old structure off and marked up this level as a more significant level then, as that becomes our new stage 2 breakout level to watch, as there was multiple tests in this area. So all of this kind of zone, not particularly that level exactly, it's more of a zone than a level. So following the spring in here, you've got early Wyckoff entry points as it comes back through, and then you've got the stage analysis entry point at the stage 2A breakout point there. So when we look at this chart, as I said, you can see various things on here. We've got the relative strength versus the S&P 500 moving above the zero line. So the zero line is called because in the old Mansfield relative strength indicator, it was a flattened indicator. So it was actually, you'd have at the bottom of the chart, we had a flat line across here, and this was the zero line, and the relative strength would move above and below it as an oscillator. But with this one, the zero line is this 52-week moving average here. So this is actually a unflattened version, and it gives you a little bit more context of what's going on, as the moving average angle also assists you to tell you whether it's early or later on the actual breakout point here. So at this point, it had moved quite strongly through the zero line here, so across the zero line, and at the breakout level here, it just started to move above the zero line, so the 52 RSMA, and starting to outperform the S&P 500. So, and there was an exceptional volume increase. But let's go back in time a little bit. So you're not going to see the chart like this. This is not how we look at charts. We don't know what's going to happen in the future. So at the time, if we go back to the week before the actual breakout, this is what the chart would have looked like. So when you're actually looking for potential stocks in late stage one or potentially about to move into stage two, you actually need to be looking for base structures. So as you can see, this looks like a choppy mess at the time. You've got a couple of years before, as the market was in a huge stage 4 decline for multiple years. It was an extreme bear market for multiple years. So if we go forward to the S&P 500 at the time, you can see the long bear market with multiple bear market counter trend rallies back up towards this 30-week moving average, and then it had been basing for the majority of the last year into 2002 into mid 2003 there. So we go back to the Apple chart now. You can see that Apple had got down to lower levels much earlier and had been going sideways in a big choppy range for a good 2 years at that point. So it had a 100% bounce and a 77% bounce, and then this current stage 1 base structure at this point had moved around 30%. So it was tightening up. The volume had dried up somewhat. It was much less volatile than it was at that point. So as I said, we had a selling climax in here and an automatic rally. So we'd start to mark the start of the base structure from this area. So when you're looking at a stage 1 base and you're looking for the stage 2 breakout point, this is how you initially mark the range. You start with the buying climax and the automatic rally, and then you look for additional points. As the base structure can move, you potentially have an up thrust, as we got here, which might raise the bar. You can potentially have lower levels. So down here, you can see we've got lower levels where it's sprung above the 30-week moving average here multiple times, as I said, and then it's formed. We've got a little bit of a range in here. So this lower level down here is more significant, as there's 5 or 6 tests of that level before it starts to come back round. So we would be at this point looking for a breakout through this area. So this would be our stage 2 breakout point we'd be looking for, and for the relative strength to start outperforming the S&P 500. So obviously, we know the result of this one. I'm assuming it was an earnings move on that kind of volume. So huge move on extreme volume. So that was the most volume that I'd seen in many years there. You can see all the way back to what we got there, 5 billion. So yeah, it was the biggest volume it had seen for multiple years there on the stage 2 breakouts. That's one of the key characteristics that we look for. But obviously, many people would have missed that breakout. It was such a huge and sharp and fast move, and it'd been in a huge stage 4 decline for multiple years that people had generally lost interest, and it had formed this terminal shakeout as a spring and come back in again. So there'd be some early traders getting back in at this point, as I said, using the Wyckoff entry points, coming in early following the spring in phase C of a potential base structure, and it'd been going sideways for about 8 months or so. So that was obviously it wouldn't have been clear to everybody at the time. So if you see charts like this and it looks like this, it's like brilliant. That's like it's really clear as a stage 2 breakout. As you can see, at the actual time, it's much less clear when you're looking at it at the right edge of the chart. And these are the kind of charts that you need. What you need to be looking for. This was a more extreme example in terms of it actually sold off and had a huge shakeout. But many stage 1 bases do have a shakeout at the bottom of the range, as it tests the demand with a shakeout move and then springs back up strongly. So I thought that would be a good way to start the video and give you an example of a stage 2 breakout.